Welcome everyone to this channel. Today we are diving into the world of stock market. Whether you are a seasoned investor or just starting out, understanding the basics of stock market is essential. In this video we'll cover everything you need to know, from the history of the stock market to how stocks go from an IPO to secondary market, and the main themes driving this financial realm in most simple language. So let's get started. Before we delve into the main concept, let's take a quick trip back in time to understand the roots of stock market. The concept of trading stocks dates back to the 17th century when the Dutch East India Company issued shares to the public. These shares allowed investors to buy partial ownership in company and in turn share in its profits. Over the years, stock markets evolved into formal exchanges where buyers and sellers could meet and trade shares in various companies. In India, the Bombay Stock Exchange and National Stock Exchange are the primary stock exchanges, while the New York Stock Exchange and Nasdaq are prominent in United States. The stock market grew significantly in 20th century, becoming an integral part of global economy. Now let's break down what stocks are and how they work. A share is like a piece of company that you can buy. Imagine a company is like a big pizza and each share is a slice of that pizza. When a company decides to raise money from public, they offer these pizza slices or shares to people who want to become part owners of the company. So when you buy a share of a company, you become a shareholder, which means you own a tiny part of that company. When a company decides to raise capital going public, it conducts an initial public offering or IPO. During an IPO, company offers its shares to the public for the first time. Investors who participate in the IPO purchase these shares directly from the company. The money raised through IPO goes into the company's coffers, allowing it to fund its projects and expansion plans. Once the IPO is done, the company's shares begin trading in secondary market. This is where the most stock market action takes place. The secondary market includes well-known stock exchanges like NYSE and Nasdaq in USA. In India, it is BSE and NSE, where investors can buy and sell shares with each other. In secondary market, the stock's price is determined by supply and demand. If there is a high demand for a stock, its price will go up and vice versa. This is influenced by factors like company performance, economic conditions, and overall market sentiment. So what's the main theme driving the stock market? Well, it's all about opportunity and risk. For investors, stocks offer a chance to own a piece of successful and growing companies. As the company's value increases, so does the value of its shares, potentially leading to significant returns for the investors. On the flip side, as discussed before, stocks are affected by market volatility and their prices can go up and down based on various factors like company performance, economic condition, geopolitical events, or even the act of God. You might wonder why companies go through the process of offering shares to public. There are several reasons for this. Firstly, it provides them with an avenue to raise capital for expansion, research, and development. It can be an effective way for a company to fund ambitious projects that could potentially benefit society. Secondly, going public through an IPO can increase companies' visibility and reputation in the market. It allows them to attract more investors, customers, and business partners. Now let's discuss the market participants. The stock market involves various participants, each playing a very crucial role. Firstly, there are individual retail investors like you and me who buy and sell stocks through brokerage accounts. Then there are institutional investors such as mutual funds, pension funds, and hedge funds who manage large sums of money on behalf of their client. Additionally, we have market makers who facilitate the smooth trading of stocks by providing liquidity. They buy stocks when there are no buyers and sell when there are no sellers, helping maintain an active market. At its core, the stock market is a platform where buyers and sellers come together to trade shares of publicly listed companies. These shares are called stocks or equities. Remember, the stock market can be both rewarding and challenging. It's essential to do your own research, understand the companies and its charts you are investing in, and consider your risk tolerance before jumping in. So that's it for today's video, the basics of stock market explained in very simple terms. We hope this video helped you demystify the world of stocks and investing for you. If you enjoyed this video and found it helpful, give it a like and subscribe to this channel for more videos like this. Feel free to leave any questions or suggestions in the comment box.